Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special episode for you today. We have not one, but we have two amazing guests. Our first guest is a repeat guest. He's had some of the most listened to Fintech Hunting Podcast episodes. He's a thought leader, a technology evangelist, a CMBA. He's a podcaster. Ladies and gentlemen, welcome Brian Vieaux of Finlocker. Brian, welcome to the show.
Thanks for having me again, Michael.
It's great for you to be back. Our second guest, he is an industry thought leader as well. He's an expert at demand generation, especially driving things at the top of the funnel. Please help me welcome David Camp, co-founder and president of Homescout. David, welcome to the show.
Welcome, Michael. I'm very pleased to have the opportunity to be with you for my first time. So,
well, it
exciting.
Is great to have you here. We're glad to have you. Let's kick this off. You guys have a wealth of knowledge and expertise. You guys have been in the industry. Let's first start out and kind of level set with what is your guys' view of the current market conditions? Brian, I'll start with you, and then I'll turn that over to David, where we just kind of give a quick overview of what we see going on.
Yeah, it's, as you know, Michael, before I came to Finlocker, I spent 28 years in the primary mortgage origination space. So here's what I would say is, thank God I'm not in that space right now. But, you know, a year and a half ago, I kind of missed it. So it's tough, man. David and I talk to lenders every day. It's kind of who we engage with. And it is a tough market. I talked to somebody today that said this is actually a tougher market for them than the crash.
Interesting.
And I think it's more of how quickly and how severe the market swung this time around with not a lot of warning. You know, when the crash was happening, that was like, you could see it happening over a series of quarters. And this one hit hard and it hit fast. And I also think people didn't want to believe that. I think they thought it was going to be a blip and then the rates would come back down. And we're just not seeing that. It's going the other way.
I agree completely. David, what are some of your observations?
Yeah, so you obviously, in the midst of change, one of the biggest reactions that you have is fear. And fear will typically paralyze an individual, and it will paralyze a business. What do I do? How do I do it? How do I move forward? And we experience a lot of clients that they were moved by fear and uncertainty. Now, as we look at the landscape, it's obviously changed, but we know that there's a certain number of transactions that are going to occur. There's a certain number of homes that are going to be purchased. And how do we position our existing clients and our new partners to be successful? And we've adopted a motto: the shift is the gift. And so we are focused on, in the midst of this shift, how do we leverage the tools of Finlocker and Homescout to be prepared and be positioned for the shift that is already happening. And that's kind of the approach that we've taken, despite the fear and anxiety that many of our customers are experiencing today.
Well, I love that. The shift is the gift.
Yes.
And I think part of it is it's important to have proper perspective on this market, right? I mean, it's still going to be a very large market. If you look historically, it's still one of the top 5, one of the top 6 best markets for origination volume. The
Correct.
Challenge with that is the 2 years leading up to this were 2 of the best. So it's all about perspective. There's been some reshifting, right sizing, whatever term people want to use. Some of it was needed, right? In 2020, when loans were flying off the shelf, people were paying $100, $200, $300, $400 for an underwriter. That's not sustainable, right? And as they look at their cost to originate, they've got to do something. And I think that's where you guys come in. And I want to talk about, what are some of the opportunities in this market? Yes, we know it's shifted. We know there's some people that have had some significant pain in this industry. Some haven't been able to shift. But for those that are shifting, what are the opportunities that you see? David, I'll start with you.
Yes, I think number one what I would focus on today is have a pipeline mentality. You have an existing client base. It's an existing client base with which you have a relationship. How do you engage that client base and add value so that you are positioned when they are going to be making that next transition in their life, and they will. And so we are extremely focused on, with what we've built with Finlocker, for example, it's all about the life journey. It's not about just a single event, the event of a transaction. It's about the journey, your financial journey, how you manage your personal budget, how you manage your life credit, and then how do you manage the most valuable asset you have, which is your home. And so we're very focused on, one, creating the journey, but then two, how do you specifically become laser focused on that existing database that you have? It's not about spending money, acquiring new leads, right? That may be a part of your strategy, but most importantly, much of the industry has spent billions of dollars on opportunities that have not been properly engaged, followed up with. And so we are on mission to do just that. Take your portfolio, customer portfolio, your loan portfolio, let's engage and let's move people along the journey and put you in a position to service their needs that will come back around.
Well, and I think that's so critical. And two things that come to mind when you say that is, one, historically, we have been very transaction focused instead of relationship focused. And that's a huge mistake in the mortgage industry. It can't just be about get the Hammond file in, get the Hammond file out, the Smith file in, the Smith file out.
Yeah.
And then the statistic I share on this podcast quite frequently is the average borrower is going to get 7 to 11 loans over the course of their lifetime. Currently, in today's mortgage market, 85% of those people do not go back to their original lender.
Correct. That's correct.
That's terrible statistics, and we have to do a better job. And that's why I love how you're talking about the journey. Brian, what do you want to add to that as we talk journey and some of those things that are taking place?
Yeah, I'll start by level setting that you can't fault our industry and originators for having a transaction mindset during, call it the last 18 plus months, because we already hit on this. There was more loans coming in than anybody had capacity to execute on.
Yeah.
So I don't fault anybody, but I do, it is easy for us and others, and companies are also looking back in retrospect and kind of kicking themselves for maybe not having built out a strategy on the other end of this thing. Again, no one expected it to be as severe as it has been, but no one could have expected rates to stay in the 2-3 handle, as long as they did.
Right.
I think what I really love about the way Homescout is kind of adding value, and David hit on this. He talked about the life events, and he talked about engaging your existing client base, those that you've already helped, those that they already trusted you at least once. You built a relationship with them. You delivered on that trust and on that relationship, and now you have the opportunity to extend that relationship. And what Homescout and David's team have done is, we partnered with the Homescout team, and we've jointly published a mobile app called Vida, right? Vida, life in Spanish. And so what a consumer that is in the Vida app with Homescout's deep analytics and data capabilities, coupled with the consumer's direct source permission data when they link their credit, when they link their financial accounts and create budgets, and they're using the app to kind of manage their financial life, including monitoring the value of their home. They may also be using the app to engage real estate search. All these things are signals and activities and alerts that Homescout now can deliver back to its client, the lender client, to support that ongoing engagement. And there's no silver bullet. We're not saying that
Right.
jointly we're going to create a mortgage inside of the next 6 months, but maybe inside of the next 2 months or 24 months,
Yep.
there's a cash out, refi, debt consolidation, or a new purchase that could happen. And having that engagement to the degree that Homescout's building it out is going to be putting lenders in the best position to execute.
And Michael,
Awesome.
one of the things that Brian and I talk about often, which is where I think the synergies between Finlocker and Homescout really began. There's a lot of sophistication around loan portfolio engagement, loan portfolio retention. And what we're, in essence, have built together is a tool that certainly you could leverage for loan portfolio engagement, but more importantly, it's your database engagement. Why not be as sophisticated? Too often these investments are made in a variety of contact relationship management tools, but it's left to the loan officer alone to come up with the strategy. And what we're saying is, no, let's come to the table with the strategy. Let's come to the table with the data. Let's come to the table with the tools, and let's be sophisticated in our customer retention approach in the same manner that we're sophisticated in our loan portfolio retention approach, if that makes sense.
It certainly does. And so as you talk about that retention, I think one of the critical things, and I want to get kind of both your guys' perspective on this, is I know from your perspective, Brian, one of the most important things is really getting at the very front end of that funnel and helping people and educate them on all of these different life events. And if you're there at the forefront of that, then eventually things are going to turn out and you're going to get their business. And I think combining the power of a Homescout and the data and the analytics and the notifications, that's where I think the magic happens. Talk to me a little bit more about kind of what you guys are delivering to the marketplace in this app, and more importantly, what's the value that people are getting from that?
Yeah, I'll start by maybe framing what I'm seeing others do in the space. Chase, big bank, one of the biggest banks, they're aggressively marketing to consumers, direct to consumers around their app, right? Their app. And something that really resonated with me the other day, I saw this ad on TV, and it was combining home readiness and home search. It was home loans and home search in one environment. And I'm like, that's what Homescout and Finlocker are doing together with the Vita app. It's readiness, it's financial fitness, it's home search, evaluation, all in one place. So that's one example of what one of the biggest of the big banks is doing. And then we all know what Rocket Mortgage is doing and what they've been doing. And, the industry owes a lot to Quicken and Rocket for really kind of raising the bar on consumer expectation with technology. You go back, 3 years when the Super Bowl ad, push button, get mortgage. Before that, people really weren't talking about point of sale and speed to lead and all this stuff. And now it's like table stakes that you have to have kind of that experience. Well, rewind now to last December 2021, Quicken buys Truebill. Truebill is a consumer-facing personal financial management app. They have financial fitness, and they do some different things from an engagement perspective. But the point being is Quicken bought that app, bought that customer base. This summer, rebranded it Rocket Money. Now, they're out there peddling Rocket Money as this up-the-funnel engagement. And what we've done together with Homescout and Finlocker is we've engineered a product that lets the everyday lender of any size get in the game and engage consumers with similar tools that the biggest of the big banks and the largest originator, frankly, have.
Let's talk about that, David. Go into a little bit more detail, target audience, right? Brian just said it could be the biggest or it could be the smallest or anyone in between. Talk to me about how you guys deliver it to any lender of any size, and the power of that then leveling the playing field?
Great question, Michael. So number one, the entire platform, including the Vita app, right, powered by Finlocker and integrated with Homescout, can be deployed at the loan officer level along with any of their affinity partners. So if I'm a loan officer and I'm working with a realtor, I'm working with a financial advisor, so I can bring them into this application, and we can leverage the sphere combined that we all have, and we all get to see that activity. So it empowers at the loan officer level, but it allows that loan officer to bring in as many affinity partners as they would like. Number two, it then moves up to the branch model, to the regional model, to a company model. And then finally, you could deploy this as a national platform that could power a bank, that could power a credit union, or it could power an IMB. It doesn't matter. Any size organization. And our sweet spot, candidly, is typically what I would call that mid-tier IMB, that maybe has 100 to 250 loan officers, and we can empower them and put them in a position where they, as Brian said, they have their Rocket money. They have their Rocket Home, Rocket loans. They can have a national portal. They can have an app. But in addition to that, we can show them how to fuel the top. If they need to go get more opportunity, then we know how to fuel the funnel and fill it up. We know how to work the funnel. And the one thing, Michael, that we clearly understand is we know the gaps. We know what the loan officer will and will not do, because what's the best and highest use of their time. And in our process, for example, we got a call center that does all the follow-up. So somebody downloads the app, they get engaged, then we're doing the follow-up for the loan officer, for their realtor partner, because that's a lot of time to take that top of funnel individual and move them to a point of engagement. So it's anyone within the company, from loan officer, to a branch, to a region, any size. It doesn't matter. We're here to support their need.
Well, I think it's a very exciting partnership. And before we end, I'll make sure you guys share how everyone can get a hold of you. As we're winding down, we could talk about this for hours. I'm very fascinated about a lot of the cool stuff that you guys are doing and the expertise that you bring to the table. What do you think's in store for the rest of this year, and really kind of looking on the horizon for the first part of next year? What do we need to start looking at? Brian, you had mentioned right at the top of, hey, not a lot of people saw how things would turn that quickly. What should we kind of be on the lookout for this next 6 months, this next 9 months?
Yeah, it's a great question. I think the way I think about it is, and you hit on this, Michael, early in the conversation. Pre-pandemic, the industry was ripe for some consolidation to happen. We were probably within 60 days of having significant industry consolidation, and then the industry got bailed out, which it often does, by the feds and lowered rates. And I think we're now going to get that consolidation. We're seeing it happen. Sadly, it's happening in a couple different ways. It's happening rapidly, but I do think we're going to see kind of the balance of this year, more of that consolidation happen, more of the capacity come out of the industry, which for those that are left in it, which truly are the strongest, that should survive and continue to add value, there'll be some, normalization of margins again. It'll probably be painful for a few more months or quarters, but then it'll normalize. And what we're seeing on the Finlocker side is that the folks that we're engaged with have a winning mindset. Yep. They're in it for the long game. They're not they're not hyper focused on tomorrow's deal. They're thinking about, how do I work today to build next year's pipeline and next year's production? And so that's where, partners like Homescout and Finlocker together with these types of lenders are the right fit. We're not for everybody. If you're in the transactional mode and you're just living off of yesterday's closing, you're probably not the best partner for either of us to engage with. But the good news for us, there's plenty of lenders and originators that are playing the long game. They've done well, they've been successful, and they had the mindset to kind of save for this market. And some are actually investing in this market to come out even stronger. And those, I'm excited to see kind of who are the new set of leaders coming out of this market.
Right. And gain market share. Those that lean in are going to gain market share. You look back at 2008, Rocket wasn't number one. UWM wasn't number one. They leaned in, and look where they are now. David, any last minute observations that you see as we wind down through the year?
I said at the beginning of the show, our motto is the shift is the gift. And what we're trying to encourage our clients to do in the midst of this is to be creative in thought, creative in approaches, and how do we support that? So that's first and foremost. And then secondly is I think what you find in Homescout and Finlocker, Brian and I and our teams, we've been in this industry a long time, right? We've supported it a long time, and it to some extent is personal. And what I would say is you've got two partners in this industry that will walk this journey with you. And what do we need to do as a partner to help you get to the other side in a position of strength? And that is our view of this, is we want to come alongside of you and be creative in thought and new opportunity. And we want to come alongside of you and act as a partner to help you get in a position of strength and be ready for what's next.
I love it. And as I mentioned, we could talk for hours on this. What's the best way, Brian, I'll start with you first. What's the best way for somebody who wants to find out more about Finlocker and this new partnership? What's the best way they can get a hold of you and your team?
Yeah, so finlocker.com, one word, finlocker.com. They can go there. They can actually see a self-serve demo or schedule a one-on-one with one of our team members. We're also going to be doing a LinkedIn Live kind of presentation on October 6th, kind of a full demo of our product. We'll be talking on that as well about our partnership with Homescout. But I would say finlocker.com, LinkedIn Live on October 6th, or email me, brian.vieaux@finlocker.com.
Awesome. David, what's the best way people can get a hold of you and your team?
Go to homescout.com. We are a portal. So when you go to homescout.com, click on products in the header, and it will move you right into our sales team. Phone numbers, contact information, all there. Scheduling demos, all there. If you want to connect with me directly, it's david.camp, CAMP, @homescout.com. Plus, we've got a wonderful community. If you go on Facebook, Homescout Community, ask to join Homescout Community. It's our product releases, and you get to see the good, the bad, the ugly. Our clients come in there and go, this doesn't work, this is great, and you get to collaborate and have full view of everything that we're doing with our clients in Homescout Community.
Outstanding, guys. I can't thank you enough for being guests on this episode of the Fintech Hunting Podcast.
Thank you, Michael.
Thanks, Michael.